Welcome back to Stoxcompare. All right, today's explainer is covering an absolute monster in the market right now. We're looking at the explosive, jaw-dropping numbers behind the AMD AI Surge. I mean, this company is fundamentally rewiring its financials to dominate the next decade, and we're going to dive right into exactly how they're doing it.
Look, you really need to understand the sheer scale of what's happening here. The stock is up a staggering 235.31% in a single 12-month window. Think about that. In just 1 year, AMD has rocketed to a massive $526.94 billion market cap. They're already up almost 45% year-to-date alone. This isn't just a rally, guys, it's a financial shockwave. But to understand how on earth they are sustaining this $500 billion valuation, you really have to understand the brutal battleground they're operating on right now.
And that brings us to this idea of the two-front war. Okay, AMD isn't just fighting off some startup, they are taking on two of the biggest titans in tech history simultaneously. On one flank, they're going head-to-head with Nvidia for a slice of the explosive AI accelerator market. And on the other flank, they're locked in brutal, hand-to-hand combat with Intel to dominate enterprise data center servers. Now, fighting a multi-front war is notoriously difficult, right? And it requires an unbelievable amount of capital. So how exactly do you fund a war machine like that? Well, the secret lies in their aggressive R&D scaling. Because, let's face it, you simply cannot fight Intel and Nvidia on a budget. Just look at the jump from 2020, back when they were spending $1.98 billion on research and development. Fast forward to the 2025 projections, and that number skyrockets to an incredible $8.09 billion. This is a highly strategic cost. It's actively consuming between 23 and 25% of their total revenue. They are literally pouring a quarter of every single dollar they make right back into their silicon to make sure they don't just compete, but actually win.
Now you're probably asking, is that massive R&D bet actually paying off? Oh, absolutely. Let's look at the structural shift in their revenue. Back in 2023, during the broader semiconductor slump, their revenue bottomed out at $22.68 billion. But look at the staggering recovery projected for 2025. Top-line revenue is expected to stage a massive leap to $34.63 billion. That jump isn't just organic, slow and steady growth. No, that is the unmistakable, heavy footprint of explosive enterprise AI adoption hitting AMD's balance sheet right now.
And honestly, it gets even better. Because look, any company can grow revenue if they just slash prices, right? But AMD is doing something much, much harder. They are scaling with incredible profitability. They are maintaining remarkably stable pricing power, approaching a 50% gross margin by 2025. But the real story here is the massive margin recovery underneath. Driven by this highly profitable enterprise silicon, their net margin is snapping back from a painful 1.77% low in 2023 all the way up to a projected 10.66% in 2025.
Okay, now here is the real secret sauce. AMD possesses a massive, massive structural advantage. We call it the Fabless secret. Out of that jaw-dropping $34.6 billion in projected revenue, their capital expenditure, the money they actually have to spend on physical assets and equipment, is just a tiny fraction. It's only $1.01 billion. That means capital expenditure consumes just 2.9% of their total revenue.
We really need to pause and aggressively emphasize the contrast here because it is the entire key to their cash generation. AMD operates on a lean, mean, fabless model. They design the chips, and then they pay TSMC to actually build them. This is exactly why their CapEx sits at that tiny 2.9%. Now compare that to a traditional foundry model like Intel. Intel has to bleed tens of billions of dollars out of their balance sheet just to build and maintain these gigantic physical manufacturing plants. AMD has absolutely zero need to spend that kind of money. They just outsource the physical heavy lifting.
And because of that exact structural advantage, it leads us directly to this specific number. $6.69 billion. I want you to lock this projected 2025 free cash flow number into your head for a second, before we break down exactly how they're going to pull it off. Because frankly, this single number is what Wall Street is completely obsessing over right now.
When we break down the operational math here, it's actually staggering. Because AMD is fabless, they are basically an absolute cash printing machine. Just look at the flow. They pull in an estimated $7.70 billion in net cash from operations. And because they don't have to build those massive factories we talked about, you only subtract that tiny $1.01 billion in capital expenditure. And what falls out the bottom? That incredible $6.69 billion in free cash flow for 2025. To put that into perspective for you, at their 2023 bottom, free cash flow was just $1.12 billion. We are looking at a nearly 6x jump in cash generation in just 2 years. That is wild.
And the really crucial point here is that this growth isn't just relying on AI hype. The foundational business is finally stabilizing. The bleeding we saw in the consumer PC market, that has officially stopped. And this stabilized foundation sets up a spectacular trajectory. Total net income is projected to multiply 5-fold from its recent lows of $0.85 billion in 2023, soaring all the way up to a peak of $4.33 billion in 2025. So you have compounding corporate health happening right at the exact same time that AI is grabbing all those flashy headlines. So when we pull all these metrics together, we can see exactly what a massive inflection point looks like on a spreadsheet. This is the 2025 leap. We're looking at internal guidance signaling extreme confidence, an $8.8 billion top-line revenue surge, margins effectively doubling from 6.36% up to 12.51%, and net income rocketing from $1.64 billion to $4.33 billion. Make no mistake, this is the very definition of a hyper-growth phase.
Which brings us to the ultimate verdict for investors today. You see the massive run-up, but you got to ask, is the premium actually justified? Well, let's look at both sides. The bear case looks at that massive PE ratio of 123, meaning, investors are paying $123 today for every $1 of current earnings, plus a price to book of 5.55. They argue this stock is priced for absolute perfection. But on the flip side, the bull case points directly at that $6.69 billion cash flow we talked about, and an incredible return on invested capital of 20.1%, showing just unmatched efficiency in turning capital into profit. The bulls are arguing that yes, you are paying a massive premium today, but it's for an absolute cash-printing machine projected for tomorrow.
So, where do you stand? Are you buying the growth story, or is a 123 PE ratio just a little too rich for your blood? AMD isn't just selling chips anymore, folks. They are selling the infrastructure of the future. The real question isn't whether AMD is overvalued today, it's whether anyone else can afford to fight this two-front war tomorrow. I want to know what you think, so let me know your verdict down in the comments below. Do you think AMD's premium valuation is actually justified? Tell us. And if you found value in this explainer, make sure to hit that subscribe button and stick around with Stoxcompare for more deep dives. We'll see you in the next one.